Hi guys, today we will talk about the most important part for the trading, which is ignored by most of the traders when they're trading, um, which is the psychology. Most of the people, when they see um, a lot of fluctuations, they jump right in without checking if that is the right trade, if that is um, what they wanted, if it aligns with their bias. So without checking all that, they just jump into it and they end up losing most of their money or most of their account. Um, or another scenario is when they're trading all the time, they take a few bad losses. Then when actual opportunity arrives, they are very reluctant to jump into because they've already taken the losses what um, they thought they could, what they were they allowed themselves to take. So because or they don't have enough margins left to take any further trades. So today we will talk about how you trade. So first of all is your risk management. You make sure, as we've discussed before and I've shared in the group as well, management is the key part. You don't take more than 2%. If your account is big enough, even less than that, 1%, half a percent, depending on how big is your account. But even if it's small, you don't take more than 2 or 3%, because it doesn't matter how good you are, there are going to be days where you are going to lose. And you don't want to take that negativity into the next day or next session. So for that, my advice to you guys is trade less, but only take the trades which are good trades, which obviously you can never be 100% in this game, but which checks most of your um, checking list. So go make a list that works for you. I've got a list that works for me, but it might not work for you because depending on the times you trade and everything else, the style of trading. Every trader has a different style, different timing. So according to that, it doesn't mean that well, if I share my list with you guys, it will work for you as well. My psychology is different. Your psychology could be different. So you need to find your own footing. You need to find your style of trading first before you start doing anything before you start taking trades. Um, Now, one of the so risk management again is like, for example, if you're taking only 2% and you end up taking 10 trades um, that have gone to loss, straight 10 trades. Now, obviously, it's not going to happen because it doesn't really work that way. And if it is happening, if you've taken 10 straight losses, that means something's wrong in your style of trading. You need to go back to basics. You need to have a look. But just for the sake of it, let's say if you have taken 10 trades, you've only lost 20% of your capital. That means you've still got 80% left and you can come back. But if you're taking more losses, and you're risking more, that means your capital is going to be finished very, very quickly, and that means very, very quickly you won't have any money left to trade with. So when the time comes, there will be no money to left to trade with. Um, so it doesn't matter how small or big your account is, keep on building that account. So the first target needs to be building that account and protect your assets, protect your capital, because if you've got no capital left, it doesn't matter how much knowledge you've got, you can't trade. It's as simple as that. Um, so today is all about we're only talking about how to trade. So you take it as a business. There is uh, there aren't many businesses that can um, work overnight. You get into a business and the next day or day after tomorrow you would say, okay, you're a millionaire. It doesn't work like that. You need to build that business. You need to concentrate on it, and slowly, slowly, it gets better and better and better. So stop thinking that it's a get rich scheme and overnight you're going to get a millionaire. No, it's not. It's simply it's a business. You're going to have losses. You're going to have bad days. You're going to have good days. You just need to manage and you need to make sure that your good days are more than your bad days. Your good trades are more than your bad trades. And another problem is sometimes some people what they do is they when they're taking losses they take too big of losses, and when they're taking um, profits, they close very quickly. You need to turn this around. It needs to be the other way around. You need to have a stop loss in place, and if it hits that, let it hit. Smaller the stop loss, better it is. So don't go for the trades that are not there. Don't force the trades. Only take the trades which you're sure about, which you think it's going to work, and still leave margin for the error. And if it's not going to work out for you, don't give it extra time. Just cut your losses and move on to the next trade. Similarly, if you are in profit, have a target. If it is going to be 30 pips, it's going to be 40, 50 pips, whatever target it is. Sometimes it can be 10 pips for you. If you're a beginner, it can be 10 pips, it can be 5 pips, but have that um, a target. As soon as it hits the target, sit back, watch the market, and see what market is doing, and then find another trade instead of just thinking that all right, it's green, it's making money, let it just let's keep going, and it's never going to keep going in one direction. It's always going to turn. It's always going to reverse. So you need to learn how to take profits just like you need to learn how to take losses. So both of the things go side by side, and um, you just have to make sure that you're working on it. Now, one way of doing this is you can, instead of working every trade in money or pounds or dollars, you could do it in percentage. So when you're doing in percentage, it doesn't feel like you're losing money. I know I've been there as well. Every trader has been there. When you're losing money, you don't really want to close the trade. But if you don't close the trade, you will lose all your capital, and you don't want to do that. You want to trade after an hour. You want to get into next trade. You want to be trading next day, next week, next year, and you want to be growing rather than uh, getting greedy or all those emotions. I know it's very, very difficult to handle those emotions, but until you can't handle those emotions, you can't be a real trader. So first thing you need to do is you need to control your emotions, take it as a business deal, take it as a any other thing. You can relate it with any other stuff you do. If you like to go out, to eat food and stuff, every restaurant's not going to turn out as a good one. Doesn't matter what your friends say. It doesn't matter what kind of reviews you've read. You're not going to like it. It's not going to turn out to your expectations. So what you do is you just move on. You don't stick around there. You don't say, okay, let's just order another meal and let's see what it does, if we like it or not. So similarly, that if you don't like it, you move on. If it's not up to what you were expecting, you just move on. That's as simple as that. Um, Now, at the end of it, I would also like to talk about the next week. It's a very busy week. We've got a lot of fundamentals. Um, Now, let me just show you here. So, obviously, we will share the technicals as well in the group, but we are looking at this. So, here's the calendar for next week, starting from tomorrow. Now we will see tomorrow what it does. We will see the Monday, what it does, how it plays out, and then we will work out the rest of the day and rest of the week as well. Now, try to stay away from on Monday. Just watch the market, see what it's doing. There could be reversals. It could be setting you up for the rest of the week. So all of that you need to see. Now, the biggest event that's coming in next week is the interest rates. Um, interest rate decision by USA. Now, all the central banks, every country, every currency, um, they, they meet after 8 to 10 times a year. They raise their interest rates, or they talk about it, or because this is one of the tool which is needed by the bankers or the central bankers to control the market. Um, Now, rest of the currencies, if it was going to be Australia, whatever they announce is going to affect Australian dollar only. Um, Similarly, if it was pound, it was going to it's going to affect um, English currency only. Whereas any news or any data that comes out of USA, that affects the whole world, because most of the countries are trading in pound, um, and all the other trades, for example, oil, gold, everything, all those currencies, all those commodities, everything is being traded in dollars. So this is the widely watched event, um, which determines how it's going to turn out for the um, until the next meeting. So this Wednesday at 1:30, we've got this uh, CPI coming. This is inflation report. Um, this is another tool to see inflation. Now, based on that inflation and payroll, they are going to work on the rate decision. So they are going to see if they're going to increase the rates, or they're going to um, leave it as it is. Um, so it would be coming on Wednesday. Um, with that, market is going to move. So you need to be prepared. You need to be, if you are in any of the trades beforehand, you need to get out of those trades and watch the calendar and see what it's doing. So CPI on Tuesday, we've got CPI, and then on Wednesday, we've got the rate decision. Both of these events are going to move the market a lot. So be careful with that. And um, if you are a fundamental trader, there will be a lot of opportunities this week to make money. So um, let's do that. Let's make money and let's get on to that. And I will share more once I have that. So tomorrow, which is Monday, we will watch the market. We'll see how it's going, how it's setting up, and then we'll share the technicals in the group, and we'll share more. Thank you.